Today, you are going to see something interesting because on one side, you have a defense company named Parsons, which had a $6.2 billion revenue as of last year, fiscal year 2025. And on the other end, you have another small microcap stock company, none other than Castellum CTM, which had which is a microcap stock which had a annual revenue last year, fiscal year 2025, at 52 million. But when you actually break down both of the companies and you look at the financials, when you look at things such as margins, um, growth, cash and cash equivalents, backlog, the revenue, the annual revenue, year over year growth and declines, the results might actually surprise you. And if you do enjoy breakdowns on companies like Castellum CTM or bigger cap stocks like Parson, please feel free to hit the subscribe and like button. And please feel free to comment below, as I do read every comment that comes my way, and I do love the engagement. And also, speaking of engagement, please feel more than free to check out the InvestQ community, link in the description below. Now, well, what we're going to start off with first when we compare these two companies is none other than the revenue, because the size difference in the revenue obviously matters, especially when you look at it from a scaling perspective, because Castellum CTM is much smaller compared to Parsons. Parsons, ticker PSN, kind of reminds me of PlayStation Network, but PSN generated 6.36 billion in revenue as of fiscal year 2025. But something you should notice right away is the fact that they actually did have a decline year over year of about 5.7% annually. In 2024, Parsons, their revenue was at 6.75 billion. So that drop shows that the company is currently experiencing some contraction and it may be stalling. Even if it's not completely major and it's like, oh no, things are going bad for the company, it's still a minor decline year over year. When you compare that to Castellum CTM, as we all know, they have had an increase in revenue of about 15.2% year over year, as they just reported their 10K, stating that their annual revenue was at exactly 52.9 million, which is the company's record. And it is showing the fact that even though they're smaller in scale, their financial discipline and their consistency to continue to scale the company, and their consistency in their financial discipline does play a factor into the reason why year over year they were able to have growth as much as 15.2% year over year in revenue. The next thing we're going to look at is the margins. And when we actually got to look to check how profitable the company is, when we take a look at Parsons, they had a gross margin at 22.49%. But when you compare it to Castellum CTM, the gross margin for the company was at 36.64%. So that means that every dollar of revenue CTM is keeping significantly more profit before expenses. So despite the fact that Castellum CTM is much smaller in scale, CTM actually has stronger gross margins than Parsons. Next, what we're going to take a look at is the operating income. So the operating income, when we look at that, guys, is Parsons, their operating income, their operating margin was at 6.6%. If you multiply that by their revenue, that gives about 418 million in operating income. Now, obviously, even though CTM isn't producing as much, the same type of numbers in a scaling perspective as Parsons, what you should take away here is that Parsons is profitable, but their margins are still relatively modest for a company of this size. And excuse me, guys. Next, the thing that I actually like to go over, well, actually, this is going to be the second thing, but for the cash they have on hand, Parsons currently does have a $466 million in cash and cash equivalents position. But when you compare that to their revenue, it only equals about 7.3% of their annual revenue. But then when we take a look at Castellum CTM has about 14.9 million in cash, much smaller in scale, but percentage-wise, comparing to their annual revenue of about 52 million, that's actually about 28.2% of their annual revenue. So relative to the size, CTM is actually holding a significantly larger amount of cash on hand compared to Parsons. Next, we got to look at the balance sheet. Parsons also reported $5.77 billion in total assets and $3 billion in liabilities. So overall, the balance sheet is still solid. So they're doing good there. But again, what you are seeing in the comparison is that size doesn't automatically mean that they have better financial efficiency, because if they're having worse cash burn, if they have a smaller cash balance, which would make it harder for them to be able to handle downturns when eventually they do come, because all companies go through hardships and difficulties. Whether if they have a smaller backlog potentially, which is what we're going to actually cover next. If their revenue is declining year over year, even if it's much higher scale, but say if they have a big revenue decline for a company that at this scale, like maybe if it's a 30% decline, you never know. Just because some one company produces more revenue, and even if they have more cash on hand, just because bigger is not always better, bigger is not always better, as they always say. But that also doesn't apply to the financial for in finances when it comes to investing, because a company that produces bigger revenue and just has bigger, flashier signs that show bigger dollar amounts, that doesn't mean that they're doing better financially, and doesn't mean they have more financial discipline. Now, my favorite part, which I'm going to go over actually, is the backlog. Now, this is the most important metric in government contracting. The backlog is because again, companies that rely heavily on contracts, the backlog represents, it kind of gives you an overlook in regards to how well they are able to acquire contracts and how well their revenue could potentially be in the long term. So backlog in itself represents contracts that are already secured but not yet recognized as revenue. And the reason why that matters for CTM and Parsons, just a quick recap again, is they both work in defense, and they both work and they both offer services and provide services for the U.S. government. So when you provide services for the U.S. government, companies like this tend to have a big portion of their revenue from contracts. And as far as I know, Parsons, they really have a substantial amount of their revenue coming from contracts. So this actually, in my opinion, is the most important metric. So when we look at it, Parsons currently has a backlog of about 8.7 billion, and that equals about 139.7% of their annual revenue, meaning year over year they have over a year of revenue already secured, which is very good. So it does give them room. But again, we're making the comparisons from a bigger cap stock compared to Castellum CTM. For the 52.9 million in annual revenue that Castellum CTM brought, their backlog is at $216 million. Again, what are we saying? Bigger isn't always better, guys. So that 216 million looks like it's nothing, especially when it compares to the 8.7 billion. But again, their backlog is representing exactly how much revenue they're going to continue to have in the future. With the 139.7% that Parsons had, that's just a little over 1 year's worth of revenue that hasn't been stated as actual revenue. That is amount of money that hasn't been recognized as revenue yet. But when you compare it to Castellum CTM with the revenue they had and the backlog they had, that makes up about the $52 million of revenue. That equals about 415% of annual revenue with the $216 million backlog. That means that Castellum CTM has more than over a 4-year runway for their revenue already lined up in contracts that has not been recognized as revenue as of yet. So they got a much bigger time frame and a much longer runway and a lot more flexibility to not just focus on the day-to-day operations, but also to focus on investing into the company in ways that will grow the company and expand the company. Which also, as we do know, keep in mind that Castellum CTM does say that they are looking to complete an accredited acquisition and to execute on their phase 3 plan, which is completing an accredited acquisition within the next 12 months. Now, If you are enjoying this breakdown so far and want more deep dives like this, comparing small cap stocks to bigger cap stocks in the industry of cybersecurity and defense, make sure you subscribe because I cover stocks like CTM, Big Bear AI, and other emerging tech companies frequently. Now, what this actually means for you as an investor, Parsons is obviously the larger and more established company, but Castellum CTM shows some very interesting metrics: high revenue growth, higher gross margins, more cash relative to income, a much larger backlog relative to its size. So even though CTM is tiny compared to Parsons, the financial trends are actually moving in a very interesting direction. So so, in closing, guys, if you enjoyed this comparison, comparing it to the bigger tech stocks compared to Castellum CTM, again, feel free to hit that subscribe button. And again, I'm more than happy to answer any comments or concerns or questions that you have in relation to microcap stocks or any stocks you guys want to cover. I answer every question, and I'm always happy to be here. But besides that, InvestQ out. I'll see you on the next video. Keep making decisions that are good for your portfolio in the long term.